Today is Tuesday, August the 13th, and what did we say about one tweet away from the market changing direction? Well, after yesterday's horrible performance, which was similar to last Monday's horrible performance, a tweet from the president or a statement from the White House changing or making a correction on the August tariffs or the September 1st tariffs and postponing them until December the 15th was enough to give the market the boost that it was looking for. Make no mistake about it, this is a complete reversal by Trump and an admission that he didn't listen to his economic advisors, but apparently he listens to the stock market. Advancers led decliners by about 70% to 30%, and volume was normal. The pop occurred at the open, and the market just drifted flat until the close. So that means that the stock momentum, or the oscillator momentum, was going to tick back up from here back to probably where it was on Friday. So we are churning now in between the neutral mark and the oversold mark, and we know that that can happen for a long time because we've seen it whenever we've crossed this line, except here. This was heading into the new year, and of course we just had a lot of momentum that just kept on going. Here we didn't see that suggestion, and it took a long time to get money flowing into the market, but it just stopped, and then it just tailed off from March to June. So what does that mean? Let's take a look at the charts now. Let's go and look at the S&P, up 43, which means that we were able to pretty much reverse everything from Friday. We took yesterday's loss and just completely turned it around. It wasn't an engulfing candle, but it closed higher than the close on Friday, but lower than the close on Thursday. So we're heading back up to this head and shoulders neckline, which we didn't test last week, and we could possibly test it tomorrow. We set this green line yesterday at 29.45 because that was the place of rejection back here. And it was an area where we paused here, and it was an area of rejection there. We did move beyond it, but it was bound to be an area where sellers would be sitting, and that's what we saw. Apple was as high as 212 at one point. That gap from early August is gone. So we closed two gaps. We could say that this was a gap, but we tend to overlook them because there are tails that offset each other here, and that's enough to tell me that there's no market concerned gap there. So the Chiku span is in the open. Let's look at 1 week, and Apple is looking pretty strong. Apple is looking pretty strong indeed, but we are one tweet away from a reversal, and I just don't trust the White House to not do something to screw it up. I think the president thinks that with the tweet he can reverse anything that he's done, and therefore he can act on impulses and he can ignore economic advice. Caterpillar had a nice rebound, rejected at the 8 EMA. The weekly shows us that support was right around the 50% retracement. We're still not out of the woods with Caterpillar, and this was taking tariffs off of goods that would be purchased for Christmas, because the buying was happening in the month of August, so that manufacturers could get these into the pipeline to be shipped in September and October to stock the shelves in November. People don't buy Caterpillar tractors at Christmas time, so this was just a sympathetic bounce. Doesn't mean anything. In my opinion, Caterpillar can still go lower. GDX stayed within our trending range, so I didn't add any stock. If we turn around a little bit tomorrow, it might be a time to add some more. I have 300, I'm heading for 1,000. I might add 100 or 200 tomorrow if we get green reaction in gold. WDC, sympathetic reaction to the tariffs, but again, I don't believe that the chip makers are going to see any improvements. The computer makers will, and that may see something for the chip makers. The iPhone, of course, is benefiting from that tariff, as is the iPad, that tariff extension. Whirlpool, we saw Whirlpool make a big move, and I did, because I know I've lost my stock that has the 130 calls, although it could go down further, and you know, I may end up just breaking even on that stock with the 130 calls. But I did buy 400 with 140 calls, and those 140 calls are now $302 positive. But it did finish below the 200, so all the enthusiasm that we had in the morning petered away, and this is what it looked like in the morning. So while the S&P moved up in this time frame and channeled all day long flat, Whirlpool didn't, and Caterpillar didn't either. So it was the consumer stocks that benefit from the tariff extension that kept the market floating. So let's look for more positive motion tomorrow, unless there's a tweet from the president.